Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tariff pushback. The Republican-led US House defies President Trump and votes to end his levies on Canada as concerns over his economic agenda intensify ahead of the midterms. Asian stocks power to fresh record highs, but treasuries slide as traders trim bets for a Fed rate cut following a stronger than expected US jobs report. Plus, earnings on the docket from heavyweights Unilever, Mercedes and Siemens. We'll be speaking to the CEO of the German industrial giant later on this hour. Well, a very good morning. Welcome to Thursday. This is the picture in your markets this morning. It's the day after the jobs report. And, of course, it was a surprisingly strong one, the opposite to what we saw in the US economic data earlier in the week. So this is the impact on the Treasury curve, really concentrated at the front end because we saw Fed bets pushed back when it comes to cuts later this year. July is where traders now see the first cut. And then if we look at the stock story, amazing really. We saw the S&P 500 ending flat completely. When does that happen? Yesterday. Stocks stateside are higher this morning, but look at Asian stocks. They're at a record high, the best start versus the US in a century. And then finally, take a look, while we're speaking of Asia, at the yen, because we saw dollar strength off the back of the jobs report, but every dollar spike is an opportunity to unwind the Takaichi trade. Traders taking advantage of that, and here we have the yen at 153 per dollar, has been at a 2-week high. In terms of the risk events on the docket for today, we kick off with fourth quarter GDP figures out of the UK at the top of the next hour, 7 a.m. London time. That expected to show a bit of weakness, but it's only going to be temporary, economists say. Can the Prime Minister hang on that long is the big question. Then we get more data stateside in the form of initial jobless claims. We're sandwiched between the two big bits of data, payrolls and CPI tomorrow. And then also at 7 a.m. London time, we get Hermes earnings. It looks like, from analysts' expectations, that this is a luxury company whose clients are immune to the demand decline. So let's see if they're right about that. Plenty on the docket today. Let's set you up for the day ahead. We begin with earnings from Siemens, and they have raised their full-year EPS pre-purchase price allocation forecast to €10.70 to a range of 10.70 to 11.10 euros. The first quarter composite revenue coming in at growth of 8%. The estimate was for 6.95%, so a beat on that. First quarter revenue is 19.14 billion euros, so ever so slight beat of the estimate there of 19.03 billion euros, and first quarter orders coming in at 21.37 billion euros. The estimate was for 20.85 billion euros. So a lot of numbers there. Really, the focus will be on the FX impact, and we'll be hearing from the CEO, Roland Busch, at 6:30 a.m. London time for proper analysis. But let's also stay in Germany and switch sectors, this time to autos. We have Mercedes numbers. Investor attention really on plans to boost margins and restore its competitive edge in China, its most important market, of course. And you are seeing fourth quarter sales coming in at 33.22 billion euros, so missing the estimate of 34.98 billion euros. They see, if we carry on in terms of what we're seeing here, for full year dividend per share at 350 euros instead of 243. So let's also just switch over to Belgium. We have the maker of Budweiser, of course. This is ABN InBev, and they are reporting organic fourth quarter volume growth of, well, it's actually not grown. It's gone down to 1.5%. The estimate was for 2.32% down. So slightly better than that, but still in the red there. So you can see there the 3-month share move of 15% upwards. So those are our earnings so far this morning. But now to our top story. The Republican-led US House has passed legislation aimed at ending President Donald Trump's tariffs on Canada. The vote signals growing anxiety over the White House's economic agenda before the midterm elections focus heavily on affordability. Trump is almost certain to veto any bill calling for a repeal of tariffs. So let's get more now with Bloomberg's John Herskovitz, who joins us now. John, how much of a blow was this vote to Trump's political agenda, and really what does the setback mean?
So, politically, this was the biggest setback for his signature tariff deal. But practically, we're not going to see any policy changes. As you mentioned, Trump is likely to veto this, and we won't. And I don't think the Republicans, or no one is predicting that the Republicans and the Democrats have enough votes to override the veto. But what we saw is that the fragile majority that the Republicans have in the U.S. Congress, House of Representatives, can break. 6 Republicans joined the Democrats in this legislation to bring it about. It shows that Speaker Mike Johnson's control over the body is limited. So, and it also put on record a lot of Republicans how they want to vote on this tariff when it comes to Canada ahead of the midterms, where affordability is going to be one of the key issues. So politically, this is a big setback. Practically, we're not going to see these tariffs be rescinded because of the veto, which has been mentioned.
And John, what might this mean for USMCA, the North American trade deal, of course?
It just increases the speculation, the anxiety over the deal. Now, we reported that Trump is looking at perhaps withdrawing from this. This news sent the peso and the Canadian dollar lower. It raised anxiety about this deal, which is a huge deal. It's these three partners, U.S., Canada, and Mexico, are looking at trillions of dollars of trade that could be affected by this. So the uncertainty over the USMCA has increased because of this. This setback it's another one of these factors that just really adds to the swirl as to what's going to go forward with the USMCA as Trump shows some displeasure with the deal, which he actually helped broker.
OK, John, thank you for the update. That's John Herskovitz there. Well, let's turn to the data now. A strong US employment report catching investors in the 30 trillion Treasury bond market off guard, sending yields surging as traders lowered their expectations for Fed interest rate cuts this year. Let's bring in Mark Cranfield, Bloomberg Markets Live cross-asset strategist. Mark, is this kind of jobs report good news for traders, even if it gives the Fed more room to stay put?
Well, bond traders in America are increasingly having to become day traders because, as you mentioned earlier in your report, the conflicting signals we're getting from economic data one day to the next. I mean, just last week, there was some private sector jobs data that was very weak. That sent bond yields lower. And we had retail sales earlier this week, which also helped to send bond yields down. Now they've flipped all the way back higher again because we've had the unemployment report, which is a bit stronger than expected, particularly with the jobless rate itself at 4.3%. And we've got more data coming up this week, which could reverse things again. So traders are having to flip-flop back and forth very quickly to try and make some money here. So there's quite a bit of curve trading going on below the hood. There's a certain steepening in general to the Treasury curve. But because the data is really doesn't have a concise pattern to it at the moment, people are having to reassess really on an intraday basis. So what you're getting is more short-term volatility. But actually, if you look at the pattern over the past couple of months, Treasury yields have been in a relatively tight range. They haven't really gone outside of that. We've been flipping between people expecting 2 rate cuts or 3 rate cuts. We're somewhere in between the two. Hasn't really gone anywhere decisively. And this is probably going to continue for a little while yet until we get some sort of clear pattern to the data. Maybe the US GDP numbers will resolve it. When we clearly see that the US is expanding nicely, maybe people can really make up their minds. But for now, it's really jumping back and forth between one piece of data and the next.
Well, Mark, the dollar's reaction to payrolls was kind of anemic, more of that so-called quiet quitting. How much could tomorrow's US CPI print change that?
Well, probably the most interesting thing we saw last night was that although the initial reaction to the jobs report was, oh, this is a good report, US dollar should go higher, we immediately saw dollar yen goes above 154 and came straight back down again. So clearly there's an underlying desire to sell the US dollar, almost regardless of what the data comes out at the moment. That's the quiet quitting you're talking about there. Today we're seeing some reasonable strength in the Australian dollar. Markets are in Asia a little bit distorted by the fact that we have a week of holidays coming up. We've got the Lunar New Year holidays right across the region. People are squaring positions. So we're having a little bit of choppy movement today. But in general, the underlying tone is that there's clear demand for the yen, Australian dollar, Chinese yuan. These are the currencies where there's quite a shift going towards them, almost regardless of what we get in the CPI report tonight. That will probably continue. But if we do get some divergence, we're looking for the headline number to come down to 2.5. If we get a significant divergence from that, of course, there'll be some intraday action. But this idea that the US dollar has started a downward path that probably has quite a way to go, that seems to have traction, and it may well continue well through the holidays next week.
Mark, thank you so much. That's Mark Cranfield, Bloomberg Markets Live cross-asset strategist. We have US futures up this morning, but Asian stocks off to the races, off to their strongest start, in fact, to a year against their US peers this century. With cheaper valuations and firmer growth prospects are luring investors and sending the regional benchmark to record highs. Let's get the details now from Winnie Su in Hong Kong. Winnie, walk us through how the Asian session is playing out.
Yeah, morning, Lizzie. Like you said, Asian stocks really continuing that outperformance against global peers, especially U.S. stocks on those factors you've mentioned. And also for us, that exposure to AI supply chain. And here you can see that MSCI Asia actually up about 13% so far this year. So that's comparing to the 1% gain in the S&P 500. And that gap is about 11 percentage points that we're seeing so far this year. And that's the biggest gap compared to historical years all the way to 2000 or so. Now, you flip the board and take a look at some of these individual market moves today. Specifically, again, we have South Korea's Kospi driving gains up almost 3%. Samsung also up 7%, and that's coming after Micron's comments overnight around that tightness when it comes to the memory chip supply chain, and that actually is weighing on the likes of Lenovo, which is a PC maker in Hong Kong, down about 5% on its earnings days. So earnings kind of positive, but concerns are still around how price hikes is going to come with that shortage in memory chips. Also, flip the board and take a look at the broader market when it comes to Japanese stocks, because actually coming back to holiday today with stocks up about 0.7%, still extending that Takaichi trade. But that landslide victory of Takaichi over the weekend really easing concerns around fiscal policy, and hence you're seeing continuous strength when it comes to Japanese yen, up for a fourth day, also coming on the back of the weakness of the yen, of the dollar, but also here the yields falling further due to those concerns easing around the fiscal policy. Back to you, Lizzie.
Winnie, thank you so much. That's Winnie Su in Hong Kong. Well, still ahead on Daybreak Europe, we're going to be speaking to Roland Busch, the CEO of Siemens, about the German industrial giant's latest earnings report. But first, what's next for the Fed after that hot jobs report? We'll be discussing with Freya Beamish from TS Lombard, so don't miss that. That's next. This is Bloomberg. Now, traders had been bracing for a weak US jobs report, but began pricing in the Fed's next rate reduction in July versus June, as previously expected. According to our next guest, that's because firms weathered last year's tariff uncertainty in the best possible way for productivity growth, refraining from passing on tariff cost increases, thereby shielding real demand and refraining from hiring. Joining me now is Freya Beamish. That was your note. Chief Economist at Global Data, TS Lombard. Good to see you, Freya. Thanks for coming in so early. Now I'm wondering, if the President wants Kevin Walsh to cut rates if and when he becomes Fed chair, what data is going to justify it?
Yeah, I mean, I think the market is sort of like expecting him to come in and cut twice, and then this data came through, and you've got sort of 2 or 3 months now where it's starting to look better. Green shoots, famous last words. You never want to say those words, but certainly it looks like there's those kind of green shoots coming through. And then the market's just sort of pushed back the cuts a little bit. And it's like, well, I'm not sure why you would be pushing that further back rather than just pricing it out, because if the economy is actually reaccelerating, then the more it reaccelerates, the further you go into the future, the more inflationary it's going to get in the context of this supply side. So we've had this sort of period where productivity growth has looked really good, I would say, just for more sort of like statistical reasons, rather than this being an indication that productivity growth trends are even better than we thought. It's just the sort of statistical blip of last year.
And does it worry you that job growth concentrated to certain sectors, like healthcare?
There certainly was a lot of healthcare in there, but most industries are now rising. I think that you can always cut the data either way to try to sort of pull out whatever story, and certainly that's the industries are important. But I think there is now a good sort of 3 months of data where there is a bit of a reacceleration there. Coming off of a very weak year, flat year in those revisions. And I think whether we look at just the sort of the actual breakdowns of the data or the detail, whether we kind of step back and think about what is the actual macro driver here, we've got kind of, yes, there's still a high degree of uncertainty, but there's a little bit of a customization to that level of uncertainty, probably less uncertainty than last year. And coming down the pike, you do have a lot of sort of fiscal policy that's going to come in and support the middle income section of the distribution with these tax refunds. So even if we're not quite there with the labour market at this point in time, doing an actual forecast from a macro sense is telling us that we will get that reacceleration this year.
So then how many Fed cuts this year? We've got CPI tomorrow. Could that even change the picture?
Possibly. We're not really that above consensus on the actual CPI numbers this year. We're modestly above consensus. Where we were more above consensus and going into this year in December, our forecast was 2.5% for growth versus 1.9% for consensus. Obviously, consensus has moved in our direction. And the place where we're off consensus now is in that productivity growth story and the implications for underlying inflation trends, not necessarily the actual CPI prints this year, which are going to be dragged down by shelter. I think you could start to see some of that tariff pass-through coming through at this point in time as that uncertainty starts to reduce. And
then I have to talk to you about Japan, because you had a kind of controversial note last month about it. I wonder, do you still think we should all just chill out about Japan? That was kind of the mood music of your note. We had the landslide victory of Tsunade Takaichi, and then we've had comments overnight from the currency chief. So still watching the FX moves, despite, we've got the yen here now at, where are we? 153 per dollar, and they're still emphasising coordination with Washington.
Yeah, I think that certainly those interventions do seem to work when they're coordinated. But I think more broadly, there's just this there's this very odd juxtaposition, which could only happen in Japan, of renaissance versus crisis. And then sometimes when people are talking about the renaissance, then the crisis people will come back and say, well, if there's a renaissance, then there has to be a crisis, because that means that there's going to be higher interest rates and they're going to have to service this debt. There's a great focus on just that. Gross debt to GDP number, which you can build a pretty scary case if you just look at that gross debt to GDP number. But even so, it takes a long time for current interest rates to feed through to the effective interest rate that the Bank of Japan the Japanese government is actually paying, because they've had a long period of low yields, and they've got average maturities of 9 years. So it takes a long time for that to happen. And then the killer blow to those fiscal crisis kind of doomsayers is that, well, have a look at the asset side of the balance sheet, which the public sector, including the Bank of Japan, they hold a lot of equities. They've actually done very well in terms of their holdings there. And similarly with the yen depreciation, foreign securities are worth a lot more, and they're earning higher interest still on those foreign securities. So the net liabilities have actually improved a lot and are probably better than the US at this stage.
Freya, thanks for still making that case. That's Freya Beamish, Chief Economist at Global Data TS Lombard. Good to see you. Well, coming up on Daybreak Europe, President Trump says he plans to press ahead with talks with Iran after hosting Israeli Prime Minister Benjamin Netanyahu at the White House. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get to our top stories from around the world now. President Trump says he told Israeli Prime Minister Benjamin Netanyahu that he intends to press ahead on talks with Iran. In a Truth Social post, Trump says nothing definitive was reached during their meeting in Washington, but he insisted that his preference was to reach a deal with Tehran. Netanyahu's office, meanwhile, says the two leaders agreed to continue coordinating closely. Elsewhere, US Energy Secretary Chris Wright says Washington can help Venezuela raise its oil, gas and electricity output this year. Bloomberg's Anne-Marie Horderd reports from Caracas on Wright's visit and the challenges US firms face returning to Venezuela.
It's an historic moment for Venezuela. The highest-ranking U.S. official is visiting the country, the first time we've seen this since the capturing of Nicolas Maduro. This is a country where the U.S. closed its embassy in 2019, and today we saw a cabinet official standing outside the palace in front of an American flag. Secretary Chris Wright of the Energy Department met with acting President Delcy Rodriguez. The two discussed business ventures and how to collaborate further when it comes to energy, mining, and electricity in the country. Secretary Wright said he came here with a message from President Trump was that he wants to make the Americas great again, and he wants to transform this relationship. He continuously talks about you can transform a relationship with commerce instead of boots on the ground. I'm Amber Herdern in Caracas, Venezuela, and this is Bloomberg.
Ukrainian President Volodymyr Zelensky says he accepted a US offer to host another round of talks next week to end Russia's war, with negotiations likely to zero in on the difficult issue of territory. Zelensky told us that the newest round is slated for Tuesday or Wednesday, but it's unclear whether Russia would agree to talks in the US. And police have named the deceased suspect in a mass shooting that left 9 people dead in a small town in Western Canada as 18-year-old Jesse Van Rutelsar. Officials say that he was found dead after the shooting at Tumbler Ridge Secondary School from what they believe was a self-inflicted wound. Well, coming up on Daybreak Europe, we're going to be speaking to Roland Busch, the Siemens CEO, after the industrial giant raised its outlook on increased demand for factory automation and electrification products. That conversation coming up next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Tariff pushback. The Republican-led US House defies President Trump and votes to end his levies on Canada as concerns over his economic agenda intensify ahead of the midterms. Meanwhile, Asian stocks power to fresh record highs, but treasuries slide as traders trim bets for a Fed cut following a stronger-than-expected US jobs report. Plus, earnings season fully underway. Siemens boosting its outlook as automation demand helps cushion negative currency effects. But Mercedes-Benz says that margins will remain under pressure amid tariffs and fierce competition in China. Well, those are your headlines this morning. Staying with earnings and focusing in on these numbers from Siemens, raising their outlook after demand for factory automation and electrification products, as I say, boosted returns to help cushion the negative currency effects. So diving into these figures, they're expecting basic earnings per share of as much as €11.10 per share for fiscal 2026. So that's up from a high of €11 per share. And for the first quarter, they've beaten analyst expectations for the core industrial business. So really benefiting from their move into industrial software and AI solutions. They saw first quarter profit in the digital industries unit, which of course makes the factory software and automation products, jumping 37%, a whopping 37%. China had been a drag in the unit, but that actually now growing strongly. So a lot to discuss with Roland Busch, the CEO. He's been speaking to Bloomberg's Tom McKenzie a short while ago. Let's take a listen to that conversation with Roland Busch with Tom McKenzie.
We had a very strong Q1, and on that basis, we increased our earnings per share guidance. So growth came from all regions and all businesses. Some examples: data center United States, very strong growth. Our newly in China developed product portfolio hits the market very well. Growth for automation. Software is growing very well. And we see big potential also for industrial AI, which is embedded more and more in our offerings. So on that basis, we increased the earnings per share guidance. And we were careful for Q1 for the other guidance. But let's see how the market is developing. It's still a very, very volatile market, but we are quite optimistic for the fiscal year 2026.
So raising the outlook, is there a particular part of the business, Roland, that is giving you the confidence to raise that view at this point?
Yeah. So, I mean, I think I touched it. Let me start with software. Software is coming very, very strongly. And this is EDA and PLM software, also simulation software. We see a good demand there. Automation, was one of the areas we had a closer look to. Now, three quarters in a row, automation is growing, coming back, in particular in our factory automation, so discrete and hybrid markets. Still, machine building lagging behind. We hope that this is picking up, which includes also still a weak automotive market. But then you have all this smart infrastructure business, so electrification, data centers. This keeps on going. I mean, we see very, very strong order intake there as well. So the order intake for smart infrastructure was 22%. So this gives us a clear tailwind also, turning these orders into revenue so that we can keep the momentum.
Is there any sense of concern, Roland, at all, that the data center part of the business, the electrification story, that will not ultimately be fulfilled, that order backlog may not be realized? Do you have any sense of concern about that at all?
Not at this point in time, and not for the fiscal year 26. That keeps on going for a while. Will that high growth rates keep on going for the next 5 years or more? I don't know. Nobody has a crystal ball. The point is that currently most of the compute goes into training models, large models, as you see. But what you see now, a trend is that more and more models are trained on the data the models did not see yet, proprietary data, for example, our design data, simulation data, and the like. And that's something which can kick in as well as inferencing. Once you train the models in the cloud and you bring it on the shop floor, then you have another impact. So therefore, we will see how dynamic, how fast AI is hitting really the real world. We believe that this happens very fast. But from that perspective, we see still there's a good growth. There might be shortages on power supply or supply maybe on GPUs, but since the supply chain is also ramping up, we believe that this keeps on going.
And you think that the capex spend, the commitments from those hyperscalers, $650 billion US potentially this year, that is rational?
I mean, I didn't make the math of all the commitment which everybody gave, including the investment banks. Adding that up, there might be a slippage, but if you take even a slippage into consideration, still enough money for a market to keep on going.
And you've got a record backlog now. About 120 billion euros is the backlog. What are the constraints around delivering that backlog? Are you able to deliver on those orders?
Clear, yes. I mean, we really invested early enough. So we doubled our manufacturing capacity for medium low voltage in the United States, exactly for data centers. We increased capacity for rolling stock. By the way, big backlog comes also for rolling stock. So we have capacity. We invested in capacity, also in capacity for our automation devices. So that's not the problem. We will deliver.
So that was Roland Busch, the Siemens CEO, speaking to Bloomberg's Tom McKenzie. Let's get analysis now. We can bring in Bloomberg's Will Wilkes out of Frankfurt. Will, just break down those earnings for us from Siemens and what stood out to you from that conversation.
I think good morning, Lizzie. I think what's really standing out from the Siemens earnings is how that company has successfully transitioned from a very heavy engineering company to something where they're able to earn much higher margins with software technologies. They've probably made the right investments at the right time, and now you're starting to see, despite all the gloom and darkness around German industrials in general, that Siemens has kind of coming up towards sunlit uplands on their software strategy.
And let's talk about Mercedes as well. They're expecting margins to stay under pressure this year. They're really grappling with tariffs. They've got fierce competition in China. How bad's the situation there?
Yeah, Mercedes has a very difficult year ahead of it. The company's got very high costs, and it's, as you said, it's competing with much more perhaps nimble and dynamic Chinese competitors in China, which is their most important market. So the Mercedes is trying to push out new models that it thinks will be more competitive in that market. But for now, it's also going to have to focus on cost cuts as it tries to boost margins back towards the double digits it had told investors it would aim for a few years ago when it launched a luxury strategy.
Will, thanks for the analysis. That's Bloomberg's Will Wilkes in Frankfurt. I want to just bring you some breaking news from Sanofi now. It has had some change at the top. So the board has decided not to renew the director mandate of the CEO, Paul Hudson. They've named Belen Garaggio as the CEO to replace him, and Garaggio will take up those duties as CEO at the end of the AGM on April 29th. Hudson's last day will be February the 17th, and the executive vice president, Olivier Carmyle, will assume the interim CEO position during that transition. So they're the latest lines out of Sanofi. Of course, we'll keep an eye on those shares at the open of trade. Meanwhile, we also have numbers from SoftBank and a redhead crossing the terminal that third quarter net income has come in at 248.59 billion euros, way shy of the estimate of 857 billion yen. That both in yen there. So the partial sale of T-Mobile shares for $12.73 billion June to December there. So what we're seeing really is third quarter net sales meeting the average estimate from SoftBank there. But coming up, we'll stay corporate and we'll be speaking to the CFO of Michelin as the French tyre maker embarks on a €2 billion share buyback. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:40 a.m. here in London. Now, Michelin plans to buy back as much as €2 billion worth of shares as the French company seeks to keep investors on side with its tyre business under pressure. I'm pleased to welcome Yves Chapot, CFO of Michelin, who's with me now for more. Yves, it's your last full year earnings at Michelin. You're leaving investors this big parting gift. Why did you think that was feasible, despite the pressure on the tyre business? Good morning.
Good morning, Lizzie. Thank you for having me. First, the company has a very sound balance sheet. We have a very low gearing ratio at 13%. And although, as you said, we have been under pressure in 2025, we have been able to deliver more than €2 billion of free cash flow, while investing €2 billion of capital expenditure in our own business, and planning to invest in acquisition for around €1 billion at the beginning of 2026. So the program, the €2 billion share buyback program, first it's over 3 years. It's 1/3 of it will compensate the shares that we are issuing for employee shareholdership programs, and 2/3 will have a relative effect. And we will start with €750 million in 2026.
And how's demand in the US? What's your read on the US economy?
So it has been a bumpy year in the US with the different announcements and the impact on the tariffs. The tariff, in fact, has two impacts on us. First, is that disturb the flow of product, as there was a lot of anticipation from makers coming from Asian countries, particularly, who send in anticipation a lot of product. So it disturbed the visibility of what we call the sell-in market, the sales to distributors. And distributors have plenty of tires on hand in their warehouse from these budget brands. That's the first issue. The second one is obviously the cost of the tariff, which is around €235 million for 2025, and another 120 in 2026, which penalizing US production, because US we sell 70% of what we produce in the US, and we produce 70% of what we sell in the US, but we export as well. So, for example, when we produce mining tire in the US, we pay duties on steel, but we don't have duty drawback when we export these products. But finally, so at the end of the year, we had when things. Yeah, when things stabilize, we have a better fourth quarter.
And so what's also the impact of all these manufacturers pivoting away from EV investments? Because I know that you invested a lot in EV tyres. How do you pivot away from that?
We are in a completely different situation than automakers, car makers. The tires that we produce for EV, for electric vehicles, are made basically with the same equipment and the same compounds, the same material than the one we produce for IC. So for us, we have invested more in our mixing capabilities in order, for example, to mix silica compounds over the past 15 years. So our factories are able to produce tires either for ICE or for EV. So we are not impacted by the decisions that you mentioned. In China, for example, when the electric vehicle, the BEV market represents now 1/3 of the total sales, we are enjoying a very strong growth, where nearly 70% of our sales at original equipment are made with the Chinese OEMs.
And what about these EU rules to protect local content from Chinese exports? Are you confident that the EU is going to introduce them?
So we will see what Europe is going to do. I think now there is the awareness that in order to protect European manufacturing employment and manufacturing base, Europe needs to find some way to protect, but as well to become more competitive, at least in some countries. And I think now the awareness is here. We will see what the European authorities are going to implement in the coming months.
And finally, Yves, there's a measles outbreak in South Carolina. There have been exposures at your plant there, I hear. Are you making MMR vaccines available for your employees there? You have quite a few of them.
I'm sorry, I did not catch your question.
Are you making vaccines available to the employees at the plant?
In the past, we have made yes. When there was the pandemics, we made the vaccine available to our employees in North America, but as well in other countries where it was not easy to get access to these vaccines.
Okay, Yves. Really appreciate your time with us this morning. Very best of luck in the future. Nice to see you. That's Yves Chapot, CFO of Michelin. Well, staying with corporate news, we broke those Mercedes earnings for you. We analysed them with Will Wilkes, seeing their, at best, flat margins this year on the China pressures. It's indicated lower on Tradegate, this stock, and so we'll keep an eye on it at the open, but not looking for the rosiest move at the start of trading in Europe. Staying here in Europe, corporate, though, we turn to Novo Nordisk next. They're aiming to start selling their weight loss drug Wegovy in vials to attract more customers lost to rival Eli Lilly. Speaking to Bloomberg, the CEO, Mike Duster, said that more than 246,000 people are now taking the pill and that its launch has been a phenomenal success.
We have for a long time been discussing how we simply don't understand how this compounding has gotten to the level that it has, mass compounding. When you see Super Bowl commercials, then you basically say this is no longer individualized medication, this is mass compounding, and we have not understood it, and we felt not just on the back of the unsafe API that's coming, and we don't know what is being injected into people's stomach. Also, where did IP go? Intellectual property is the backbone of this industry. It is really, really important that, of course, we're allowed to have the exclusivity to recuperate back the investments. If anyone can bypass the FDA and simply put any product into the market, then the system is broken. And I am very happy to see that both FDA as well as, of course, the reference to the DOJ was swift
Well, Mike, you mentioned IP, and to that point, we're talking on Wednesday, just a couple of days ago, you did file a lawsuit against Hims & Hers for patent infringement here, even though they've scrapped their planned version of your pill. So why proceed with the lawsuit if they no longer have those plans?
The lawsuit is around the semaglutide IP as a whole, not just specifically the pill. And it goes really back to the notion that we believe there should not be mass marketing of compounded products to everyone. I think compounding should be reserved for a few individuals that might have an allergic reaction to our medication, and that would be fine. But I think when it gets into the masses, then I think it needs to be addressed. We also, of course, have really continuously talked about patient safety, and I still believe API coming from unknown sources, often China, without getting the approval from FDA is not a good thing. So it has to be the original API, if anything, and of course, this is something we'll pursue.
And I do want to talk a little bit about the earnings that you did announce last week, because the guide really seemed to surprise Wall Street, and you saw that reaction in shares moving sharply lower. So when it comes to the scope of 2026, I do wonder what the biggest unknown is when it comes to that outlook, either positive or negative, when you think about factors such as your pill uptake, or you think about factors such as Medicare expansion.
I think the biggest unknown is on the volume side. We have said that we're going to grow the volume gradually, and price cuts are happening on day one. And that is why you see the numbers. Of course, the pill has been a phenomenal launch, really a good launch. As of basically today, we have 246,000 people after 5 weeks on the pill.
Now to the top corporate news this morning. EssilorLuxottica shares have jumped 12% on TradeGate after the world's biggest eyewear maker smashed estimates with an 18% surge in fourth quarter sales as it rides a boom in demand for AI-powered glasses. Analysts surveyed by Bloomberg had expected a sales jump of just over 11%, but EssilorLuxottica said it sold more than 7 million pairs of AI glasses in 2025. Elsewhere, Airbus has secured a major order for wide-body jets from Air Canada. It'll acquire 8 A350-1000 jets with the options to double the order as the carrier seeks to modernise its fleet. An analytics firm says the purchase agreement, if all rights are exercised, would be valued at about $3 billion based on current aircraft values. A first delivery is expected in the second half of 2030. Elsewhere, Bloomberg understands Anthropic is nearing the completion of a deal to raise more than $20 billion in a funding round co-led by investors including Peter Thiel's Founders Fund, D.E. Shaw and Dragoneer Investment Group. The funding round has become a who's who of Silicon Valley and Wall Street investors. Other participants include Blackstone and BlackRock. Sources say Anthropic is set to be valued at about $350 billion in the deal. And Bloomberg has learned that Apple's long-planned upgrade to Siri has run into snags during testing in recent weeks. Sources say Apple is now working to spread the improvements across future versions instead of in an operating system upgrade due next month. We're told testing has found the voice assistant cannot properly process queries, takes too long to handle requests, and faces accuracy issues. And Morgan Stanley boosted CEO Ted Pick's pay last year to $45 million. 3/4 of his bonus will be deferred over 3 years, with the entire incentive to be awarded through equity. The Wall Street Bank posted its strongest year in 2025, with earnings per share hitting a record as the stock surged 41%. Well, those are some of our top corporate stories this morning, but there's plenty more to bring you, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, yesterday's jobs numbers did no favours for people wanting Fed cuts sooner. The expectation in markets had been that maybe you could get a cut in June, but now off the back of that report, the expectation put back to July. So you can see that here on the chart behind me, but flip the board over and we can take a look at the impact on treasuries, because the impact really was concentrated at the front end of the curve. In the white line here, you can see the spread in yield between 2s and 10s. So what you're seeing here is actually in the yellow, the volatility as well, and a flatter curve and volatility up. But flip the board one more time, because we're also expecting data from the UK. GDP numbers breaking in just a few moments' time. This is for the fourth quarter. And as you can see, a bit of a softening expected year on year. But the forward-looking indicators suggest that this is going to be a temporary blip. Can it all get back on track in time for the Prime Minister, Keir Starmer? That's the question in the politics. But in terms of the other risk events on the docket for today, flip the board one more time. It's not just GDP. We also are going to be bringing you the initial jobless claims numbers sandwiched between the payrolls yesterday and CPI tomorrow. And then at 7 a.m. as well, we get Hermes earnings. Is it going to be that this is a luxury company whose clients are just that elite that they're immune to the demand declines we've seen elsewhere? All of that to bring you throughout the day. It'll be on the opening trade, so plenty to discuss. Anna, Guy and Tom will be taking you all the way to the market open. So don't go anywhere. Stay with us for all of that. The opening trade's coming up next. This is Bloomberg.